Hello and welcome to Investing Confidential. So we had some inflation data coming out this morning. The talking heads in Wall Street are celebrating. Okay, this was the PCE, the Personal Consumption Expenditure, given to us by the Bureau of Economic Analysis, another flawed data extraction company. They are a part of the Department of Commerce. Okay. Now, look, these guys are government company. They say they're nonpartisan, but look, this is a partisan organization. Okay, they want to do things to make the economy look good. I mean, when I say partisan, I don't mean partisan one party or another. They're just partisan. Period. They want everything to look good. Okay, so you can't really rely on the numbers that much because the way they gather the numbers is so outdated and so ridiculous that these numbers sometimes don't mean anything, but it's a trend. Okay, the trend is what matters. And remember, these guys are partisan positive. Okay, they don't want inflation to be higher, they want it to be lower. So what I'm going to do now is we're going to look at the raw data because you have to look at the raw data in order to really understand what's going on. You have to, eliminate the noise from CNBC and these other morons and information you're getting from your brokerage accounts and really look at the data. So let's dig into the data now, and I'm going to show you why inflation is sticky. Okay, and this is the data that the Fed should be looking at, but they got other things on their mind. But let's go now to the data. So here we look at the actual data coming from the Bureau of Economic Analysis. Okay, so again, the first few lines are the headline data, the personal consumptive expenditures. Okay, it's showing higher. Okay, they can't hide that. Okay, but really let's break this down. So let's scroll down. Okay, let's look at new motor vehicles. Okay, and what I'm looking at is the far right hand corner, which is January, February. And what I want you to do is forget about January and look at December, November, and then the previous year. I'm going to go back to that. Okay, so here we go. New motor vehicles. Okay, 125.235. I'm not going to talk the data all the time, but here's just the number so you can follow it. Okay, higher. Okay, new autos, higher. Okay, you got light trucks, okay, used trucks, lower. Used vehicles in general, lower. That's what they should be. Used vehicles they had a big run. They should be lower. Okay, now we have household furnishings. Again, these are the things that you and I utilize every day. Okay, this is not the elite. This is the real data. This is not what Powell doesn't know what furniture. Powell's never bought furniture in his life. Okay, he's an elite. He's a privileged guy. He came from a rich family. He doesn't know. Okay, these people don't have any clue what everyday people go through. Okay, again, here's furniture higher. Okay, 102 versus 101. Okay, again, we just break it down. Just plain old furniture, clocks and lamps higher, carpets and wool coverings lower, but that's because January was an aberration. But look at December, November, and October higher. Okay, sometimes you have to throw out some data that doesn't make any sense. Was there a big jump in window coverings and carpets? I have no idea, but throw it out. It means nothing. Okay, you look at the trend. The trend is higher. Okay, major household appliances lower. That makes sense. All right, they didn't have enough chips. They overproduced, and now we're seeing this. But small electronic household appliances higher, glassware higher, dishes higher. Okay, let's get tools higher. Even going back, look at the big jump in tools over the last 12 months to today. I mean, it's incredible. Let's look at some things. Again, recreational goods and vehicles overall higher. Break it down. Televisions should be lower. They were lower, right? Televisions always should be lower. Video equipment slightly higher, but again, going back, they really haven't changed much. And so this is something that's obviously helping the data. Photographing equipment higher, even going back. Look at sporting equipment. Okay, everyone uses sporting equipment. It was kind of a little bit lower, but again, going back, it's higher. Okay, motorcycles flat, down a little bit, but going back higher. Okay, even boats higher. There shouldn't be any demand for boats, but the prices are going up. Okay, jewelry, watches, higher. Educational books, slightly higher. But if, again, looking back, it's an object that's probably been flat. Let's look at some non-durable goods, things like food. Let's look at food and beverage. Food and non-alcohol beverage overall, higher. Cereals, higher. Bakery products, higher. Beef, higher. Poultry, higher. Fish, higher. You guys getting the trend here? Okay, do you see what's going on here? Okay, look at eggs, for example. Eggs had a massive jump in January for some strange reason. We still don't know why. So it looks lower, but look at the trend. Look what eggs were a year ago. I mean, it's staggering, the inflation we've had in some of these products. Again, let's keep going. Okay, vegetables, slightly lower than January, slightly lower than December, but look back. It's had a massive move, and this stuff is not going down much. Okay, the trend continues to be higher. Okay, coffee and tea, higher. Okay, liquor, higher. Beer, slightly lower, but beer, again, over a 12-month period is significantly higher. Okay, let's look at clothing and footwear, higher. Okay, garments, higher. I mean, I'm just going to keep going. It's shocking. Gasoline, we use it every day. Higher. They tell us that gas is down. No, gasoline prices are going higher. Crude prices are going higher. They are temporarily lower. They're now going higher, especially the fact that the Biden administration, the current White House, destroyed the strategic oil reserve, and now they actually made public they're going to start buying it back. So what do you think? What do you think crude's going to do? Okay, when these morons announce, I mean, it's so stupid. You don't announce that you're going to buy, 300 million barrels of oil. I mean, it's just so dumb. So where do you think crude's going? Higher. So gasoline prices, higher. I mean, it's absolutely shocking, some of the things that these. Okay, so we had a little reprieve in fuel oil. Fuel oil had a big run up after being a huge run up, and now it's coming off. It should come off because it was up 50%. So it was one of those things that should be lower. But everything else, keep going higher. Pharmaceutical products, higher. Games, toys, and hobbies, higher. Pets, higher. Flowers and seeds, okay, off a little bit, but again, going back, the trend is massively up. Okay, household cleaning products, higher. I mean, I'm just going to keep going. You have to see this. Tobacco, higher. Magazines, slightly higher. I mean, it just keeps going. Let's look at services. Housing and utilities, higher. A rental units, higher. I mean, you can go get these. These are easily to find. Water and sanitation, higher. Okay, we've had a little reprieve in electricity and gas. Again, significantly up from a year ago. But again, January had a big spike. I don't know why. Boom, lower. But overall, you're seeing a couple of things lower. Everything else higher. Healthcare, higher. Okay, dental services, higher. Paramedic services, higher. I mean, this is something that we use every day. Okay, nursing home, higher. Hospitals always go up. Hospitals, higher. Okay, transportation services, motor vehicle services, higher. Auto leasing, significantly higher. Truck leasing, higher. Public transportation, okay? Ground transportation, down a little bit, but again, going back, higher. I mean, railway transportation, higher. Recreational services, membership to clubs, that's significantly higher. Amusement parks, higher. Motion picture theater, slightly off, but again, going back 12 months, the trend, higher. You want to go to a sporting event, boom, look at this, spectator sports, massive increase jump in February. This is something everyone is doing. Cable satellite television, you want to entertain yourself at home, boom, higher. I could just keep going, and I'm going to keep going. Okay, gambling, higher. Lotteries, higher. Food services and accommodation. This is like restaurants, okay? boom, all higher across the board. Everything across the board. Alcohol, okay, purchased meals slightly lower, but again, look at the trend. You had an aberration in January, boom, higher than December. Financial services, okay, I hope the financial services industry goes under, but that's just my personal opinion. But higher, the cost of financial services, fees higher, and by the way, because of the Silicon Valley Bank and what's going on, these fees from these commercial banks are going to go significantly higher. Okay, they are going higher, and that's about pension funds, higher. I mean, this is just the reality. Okay, mutual fund. This is what you pay for your funds. Your wealth manager, boom, he's whacking you good here in February. I mean, it just continues. Insurance higher. Communications, telecom, okay, off a little bit, but telecom's pretty steady. Okay, there's one that's obviously going down a little bit. Okay, and there are some that go down, but most go up. The post office higher. Okay, this is what we do every day. We send messages, we send postal services, boom, higher. Okay, higher education, one of the biggest ripoffs in today's society, higher. I mean, legal services, too. If you need a lawyer, boom, higher. Accounting services, higher. You want to go get a haircut, boom, higher. I mean, look, I can continue, but I think I'm going to stop here. You get the trend here. There are some things going lower, but everything else that we use every single day is just going up and up and up. So the bottom line here, folks, is this PCE, it wasn't positive. Okay, there's no reason to buy stocks on back of that. The Fed is looking at this. The Fed knows. The Fed has to keep raising rates, but as I said, they are going to pivot at some point very soon. Okay, and it's going to be a major policy error because inflation will continue to go higher. So anyone looking for a cut in July, forget about these cuts in July. If the Fed stops, they're going to stop and pause. And they may pause through the summer, but I'm going to tell you that the trend is higher for inflation, and they will make the same mistakes that the Federal Reserve made in the 1970s. They stopped, they cut, boom, they had a raise again. They paused, boom, they had a raise again. And this is going to happen here. So, and this, by the way, is just not a good environment for stocks. Okay, and so let me show you one last chart. Okay, this is a very interesting chart about all this quantitative easing and all what the Fed's been manipulating. Okay, so we go back here to the 1950s, looking at annual rates of our GDP. Okay, so from, let's say, 1950 to 2008, 2009, we had what we call normalized interest rates. Okay, they were 5, 6, 7%, but they didn't go much below that. That was sort of, and our GDP averaged around 3%, sometimes lower. We had recessions, blah, blah, blah. And look how many recessions we had from 1950 to 1990, 2000, when the Fed really started, Greenspan started manipulating things. Okay, they don't want recessions, by the way. Okay, look at prior to 1980, a lot of recessions, and since then, nothing. That's because the Federal Reserve has basically been manipulating the business cycle. But I digress. Look at from 2008, 2009. Okay, the average is around 2%, much lower than the above 3%. That's a pretty significant move. That's almost 30% lower GDP we've had since 2008. Now, what's been happening since 2008? We've had quantitative easing, and we've had rates go to zero, essentially down to zero, constantly going down. That was done to spur the economy. Okay, so they use quantitative easing and rates to zero to spur the economy. Yet our GDP on average the last 12 years, 30%, more than 30% less than it did the previous 50 years, 60 years. Okay, look, folks, this is the reality. This is the data. Do not let them fool you. Okay, inflation is not going away, as much as the talking heads like to say. So This is not a video to tell you to buy, sell, whatever. Just tell you, here's the reality. Not good for stocks. This kind of environment is not good for stocks. Okay. So if you're an investor, as always, be careful out there.